Hey guys, I hope you're doing amazing. In this video, we're going over market structure shifts. Market structure shifts are important because it shows us where the structure is shifting from bullish to bearish or from bearish to bullish. The first thing we're going to cover is displacement and how understanding that will help us identify market structure shifts. We'll also look at examples on how to use the information and the information from the previous parts of this series to frame high probability setups. So what is displacement? Displacement is a big one-sided move with full body candles. This can be one candle, but it also can be multiple candles. And the easiest way to spot a market structure shift is looking for fair value gaps. And in this example, you see a big move upwards, leaving a fair value gap. This is called displacement. This is a huge move up. And what you often see, we're going to talk about this in a minute, price loves to trade back to the place where displacement was and where fair value gap is, and then moves away. You can also spot displacement right here. There's 1 and 2 candles. You do a fair value gap. Here again, displacement. The other side is going up right now, leaving a fair value gap. Displacement down, leaving a fair value gap. And so you can continue hunting for fair value gaps with big displacement. So now you understand what displacement is, and now we're going to take a look at how we can use this to spot market structure shifts. We use displacement to see what the order flow is doing and where it wants to go. A market structure shift is what indicates change in trend from bullish to bearish or bearish to bullish. Here we have a bullish scenario where price has displacement up, leaves a fair value gap, and breaks the last high. Now we see a change in delivery, leaving a fair value gap, and you see price coming back here and moves away. In this next example, we have a bearish one. Price is trending upwards, and now it moves away with displacement, leaving a fair value gap. Price comes back, and it moves away again with displacement, leaving a fair value gap. Price comes back to fair value gap, leaves again with displacement. Again, displacement down, breaking this swing lows. Price comes back and again moves aggressively away. So you see from this starting point, it was going upwards, and now with the displacement down, it indicated a shift from bullishness to bearishness. And you see how the price delivery is going down, down, and down. And with every single move, with this move, it broke this swing low from here to here. Then it came back up. Even if you want to use your fibs, the bodies are respecting our OT area. Moves down with displacement, it left this open. So when price comes back up, this can be a target when there's a market structure shift bullish, and with this displacement from here to here, it left a value gap while breaking this low, and price came back. We are currently at the 4-hour time frame on the Nasdaq, and what I want to see before a market structure shift, I wanted to hit a high time frame PD array. And one of the most important PD arrays, in this case, discount array, is a low. Like the low from 31st of May, you see it's violent right here and then moves up. Always have your high time frame PD arrays marked up, because when we go to the smaller time frames, for example, the 15-minute, it touches this daily low from the 31st of May, then gives a huge momentum upside. It touches this discount array in the form of a daily low, and then it gives displacement upwards. Currently, it's not in the time zone because it's the end of the PM session, but we know displacement is here, so there has to be a change in market structure, and now we're going to look for bullish scenarios. So the next day, we see in the New York session, price prior to the New York session goes down, and what I want to see in this case, rule 1, hit a high time frame PD array right here. Rule 2 is I want to see a stop rate, and what I mean with a stop rate is before the displacement up, you want to see stops being taken in the form of buy stops or sell stop. In this case, it took sell stops before giving you displacement. The third rule, displacement up, breaking swing high in our case, and leaving a fair value gap, and displacement up and leaving a fair value gap are going hand to hand. And displacement left a fair value gap, and let's look at the time we are right now. It's New York open, so we can do a trade at the start of the fair value gap right here. Our stop loss will be below here. The 33 will be below here. And our target will be this equal highs. And now we would have a nice 128 RR trade. We could also go to the lower time frame to get an even better entry. Because when you go to the 5-minute time frame, we already saw a higher time frame discount already being hit, the daily low, stop rate, and now we can remove this one. Where's the displacement? It is right here. Leaving this fair value gap, it took this swing high right here, displacement, and from this point we can do a entry at the start here, stop loss below this low, and go for our target for a 2.5 RR. So as you guys go to lower time frames, with your high time frame analysis in mind, you could even get a better entry and higher risk to reward. What at the end of the day makes you more money. You could even go even further down the rabbit hole, go to the 1 minute. Now we have the 1 minute chart. We have our stop rate right here. And then it displays up. This is the displacement move. And where inside the displacement move do we see fair value gaps? In this one, also here a small one, but also here. But in this move, this is not like when we're going to mark our OTE levels. This is too high for my thinking. It's not in a discount yet. Let me check. No. So if you put out your OTE levels, this first fair value gap would not be OTE level. It's even in the premium from this range, so we're not going to include this one. And if you mark our OTE areas, both the fair value gaps will do. And as you have seen in previous videos, I don't like to miss trades. So when I will take this live, I will go for the first fair value gap right here, do the trade right here. With a 40 pip stop loss, target is still the same. So at the first, and then you have almost a 5 risk to reward. So when we took our trade at the 50-minute, we had a 1.8 RR. When we took the same trade, same setup, high time frame analysis was on point, looking for displacement, market structure shift, and taking the entry in the fair value gap with all the 3 rules intact. High time frame PD rate hit, a stop rate, and displacement up, leaving fair value gap. 50 minutes was a 128, 5 minutes was a 2.5 RR, and at the 1 minute, it's almost a 5R. Where people say to you, don't trade the 1 minute, I strongly disagree. Yes, the 1 minute is more movement, more noise, some people say, but when you have your high time frame analysis on point, guys, you know that the same setup will form even if it's on the 50-second chart. So keep it in mind. If your rules are there, just go at the lowest time frame you are comfortable to trade. I like to trade the 1 minute and then take the setup from there. And yes, you have a little drawdown here, 20 pips drawdown, but that's the reason we use a stop loss below the last low, and you should be fine. I hope you enjoyed this video, and if you did, please like and subscribe, and I'll see you in the next one.